The real estate market has been nothing short of crazy for everyone. Whether you're in the market or you're trying to get into the market, we're all trying to come to terms with these higher borrowing costs. The overnight lending rate right now is sitting at 3.75%, which puts our prime rate in Canada at 5.95%. So what does this mean for you? Basically, your monthly mortgage payments will be increased if you're on that variable rate mortgage. So my advice heading into 2023 in the new year would be to watch where you're spending your money in the economy. Some people's mortgages have gone up over $1,000 per month, so really watch where you are spending your money and speak to a mortgage broker to find out what the best option is for you. On the flip side, if you have that fixed rate mortgage and your repayments will remain unchanged until it comes time for you to renew your mortgage. The GTA actually saw average prices remain almost unchanged on a month-over-month approach. It's going to be a while before the economy realizes this latest rate hike. But as of right now, average prices went from $1.086 million last month in September 2022 to $1.089 million in October 2022. And keep in mind that this is for all asset classes combined. Isn't the market taking an absolute beating right now, though? Well, quite frankly, it is. If you look at the total number of sales that took place in October 2022, you'll find that there were only around 4,960 homes that traded hands in the entire month. Pretty crazy, right? And this number actually represents the second lowest number of sales for an entire month, next to July this year, where we had about 100 fewer sales in total. So the point that I just mentioned above will likely be highlighted in all the scary news headlines in the coming days. But before I go any further, my name is Trey, and I run a real estate business here in the city of Toronto in the GTA. I make these educational videos for you so that you can have a really good understanding of what's happening in the fast-paced Greater Toronto area real estate market. If you would like to connect on a one-on-one basis, please feel free to either send me a direct message or set up a call with me. You can find my schedule in the first link in the description, and you can pick a time that is convenient for you. But getting back on track, it is key to note that in July, we had that massive blow of the 1% increase to our interest rates, which put a lot of uncertainty into the marketplace. I know that's not news to anybody, and that uncertainty is still very much present today, right? A ton of buyers are on the sidelines, a ton of sellers are over here on the sidelines, and everybody's just waiting for that one little something to happen. So why haven't we seen prices come down like crazy yet? While they have leveled off about 20% from the peak in February to where we are now, you'd expect them to have dropped even further, wouldn't you, with all these rate hikes? Inflation is still sitting high at 6.9%, and the banks will continue to increase these rates a little bit until they see this inflation number in control. In terms of prices holding stable for 3 consecutive months right now, a large player here is a lack of new listings being added to the MLS and to the real estate market. As I said before, people are sitting on the sidelines, sellers are sitting on the sidelines, which is causing new listings to be down about 1,000 units versus last month in September. And we're seeing a real buildup of a lot of inventory right now. And I would like to add, when those increases happen to the interest rates, it really takes the economy around 12 months, sometimes even more, before they actually feel the impact of that rate hike. So 2023 will be interesting. Again, when we're discussing the inventory rate, it really depends on which market you are looking into. I personally do a lot of work in downtown Toronto condos, so take CO1 area of the city, for example. They have an inventory rate of almost 15 months, which is really hard to wrap your head around. That basically means if no new units were added to the MLS, it would take over a year for all those units to move. So what we're seeing a lot right now is landlords or unit owners that are contemplating selling their unit. So they're adding it on the MLS for rent and for sale. And if they're not getting the sale price that they want, they're just going to capitalize on the stupid high rents right now in the marketplace. I've also been tracking the Queen West and the Trinity Bellwoods pocket of the city for quite some time now. So from Dover Court up to College, over to Bellwoods, and down to Adelaide, give or take. And there have been 4 sales in the past 60 days. So 4 sales in the last 2 months, which is pretty wild. And there's only 10 active listings, which puts the inventory rate there around the TREB average of 2.66 months in October 2022. So the places that are selling in that pocket are taking a little bit of time, but they're also really nice. They stand out. Anything that's going to be generic or not unique is likely sitting on the market, or those unit owners aren't bringing their place to the market until they know what's going on. And this will probably continue into the new year. The outlook into 2023 is really interesting. Things won't magically get better overnight. I don't think a lot of people think that that will happen. We are going to be in a recession in 2023. A lot of people are realistic about that. The Bank of Canada is meeting again on December 8th, where they could increase rates again. But if they don't do it in that meeting, they will probably do it in the earlier stages of 2023. My guess is as good as anybody else's at this point, though, right? I did want to also highlight that the bank's latest response actually does suggest that they are nearing the end of their tightening cycle, and that fixed mortgage rates actually may trend lower divorce soon, which would make things a little more affordable. With all this said, my view with real estate has always been to buy a place if you love it and then to hold it for the long term. I say this in almost all of my videos. This way you're actually able to build equity in your place and you're not paying thousands of dollars to a landlord, which you're never going to see again. My friend Tom Story, he has a great quote that says rent is going to be 100% interest. So that is something to remember. Thank you, Tom. And on top of this, you will outlast any market downturns. Lastly, I want to finish with one question, and that is, what do you think will happen to affordability in 5 years or so? I know that it's a fool's game to try to forecast that far out, but there have just been so many factors at play here that will make things really interesting in the future. I'm optimistic, and I think the market will be back on track and prices will appreciate by that time. But on one hand, you have the More Homes Built Faster Act, which is a public policy initiative that was recently introduced to get more homes up quicker here in Canada, which will help affordability, obviously. And on the other hand, you have immigration targets that could see more than 500,000 people coming to Canada by 2025, which is only going to spike demand, right? So what do you think will happen? That's a wrap. If you made it to the end of the video, I really appreciate your time and your patience. If you like this type of real estate content, please be sure to like this video and subscribe to the YouTube page. And if you want to book a one-on-one call with me, the link is at the first link in the description. Peace.